With preparations already underway for healthcare workers as the vaccine is released today, how can you prepare your portfolio to make money off of flu fighters? Joining us right now, we have Lee Munson, Chief Investment Officer at Portfolio Asset Management, also Stephen Roge, Portfolio Manager at RW Roge. Great to see both you guys.
Thank you.
Lee, I'll kick it off with you. Basically, overall, when you look at the travel industry, which is clearly susceptible to H1N1, how do you anticipate it being hurt by this? And how does that affect an investor who may be looking at some of these casinos or cruise ship lines or hotels to invest in?
Well, first of all, I'd wait until the short sellers start to get in there. As we saw earlier this year, you saw things that were affected by Mexico. But I think what you have to do is look for opportunity. First of all, the travel industry, it's not the strongest group in the general market. They're not exactly the best run companies. I would look at indirect plays. For instance, earlier this year when we saw Mexico get hit, you had the opportunity to say buy the iShares Mexico ETF very cheaply because of the emotion of what had happened. Mm-hmm. But most of that ETF is constructed of a large telecom company. So I would say wait till the short sellers get in. Go ahead.
Well, it sounds like a lot of this is very much an opportunity, in your opinion, to do some buying.
I would, and I would probably stay away from the pharmaceuticals because, Mike just said it. These vaccinations are for people who aren't at risk as much as dying as the very young and the very old. And plus, whether it's MedImmune or earlier this year, we're looking at Tamiflu, now owned by Genentech. How much is that really going to affect their bottom line? I would look to get okay companies like in the travel industry and look to get them very, very cheap. We also have seen some reactions where people get freaked about the food supply. Smithfield Foods this year went down tremendously because they thought swine flu had something to do with pigs. And then you saw the short squeeze and the rise of volume after a few exposés from people like yourself saying swine flu is not really connected to the food supply. So look for emotion, look for misunderstanding about what the facts are, and try to take advantage of those investors' emotions versus the straight up vaccination play. I think it's hard to get those into the actual bottom line earnings.
Steve Roge, I need you on this. First of all, is Wall Street overestimating the increase in the volume of flu? That's what I want to know. Is there hype here?
The overall volume of flu, no. I think that the overall volume of flu will go up, and that's primarily because we have a new strain of flu out there, the H1N1. However, we think that the travel industry won't be affected too much. That the results or the impact will be not meaningful to many of these companies. The one area we'd stay away from is the airline industry, and not just because of the H1N1, because they really don't know how to make money and they're highly regulated, particularly the international airlines such as AMR. We think the domestic airlines should be relatively safe from this, such as the JetBlue or the Southwest Airlines.
Well, so what about the drug stocks? You got Cardinal, Glaxo, Sanofi, AstraZeneca. What about that?
Right. The backdoor way to play the H1N1 virus is through drug distribution. All these companies that have the vaccines aren't selling to hospitals, they aren't selling to doctors. They are selling to the drug distribution channels, such as Cardinal Health, and all of the testing kits will be distributed through Cardinal Health and other drug distributors, selling at 10 times earnings, and they have 20% of CareFusion's stake and 40% return on capital. That's the way to make money in the H1N1 virus. In addition, you have GlaxoSmithKline, which is developing the vaccine, but also they're developing a test kit, for a very short order test kit, which we believe will be more effective than the other test kits out there. The CDC said the other test kits are only correct 40 to 60% of the time, which isn't much. So we think Glaxo will do a good job of developing a new kit and subsequently can benefit from
but
that.
How much is that going to affect the bottom line earnings of GlaxoSmith?
I'm sorry, guys, we're out of time, but I just want to know, how do we think that everyone who wants a flu shot this season will be able to get a flu shot, H1N1?
Yes, government has contracted 250 million vaccines, and Santa Fe Avantis already shipped out 75 million of them. So that's quite a bit, and it's manufactured right here in the U.S. and Pennsylvania.
Okay. Very good. Thank you so much. We appreciate it.